Hey guys, this is Scott Horne. We're going to take a minute and just talk about an HOA foreclosure, at least in the Texas marketplace, because I don't know anybody else's rules and regulations for HOA foreclosures in other states. But in Texas, there is a condo HOA foreclosure and there's a residential HOA foreclosure. So what you have to know first off is for a condo foreclosure, there is a 90-day redemption period. And for a residential type foreclosure, I believe it's a 6-month redemption period. That means simply that the person that was foreclosed upon by the HOA has that time frame, 90 days or 180 days basically, in which to redeem the property. Now, I want to make a note because this has actually happened to me also, and something new I've learned along the way is that there are investors who will intentionally duck any notifications for redemption. They don't want to transfer the property back to the homeowner. And in today's HOA foreclosure world, I believe that the investor, if they bought that at the auction, they have to transfer it back for whatever it is they paid for it. They don't get any attorney's fees, they don't get any interest, they get nothing. Only if the HOA itself is the purchaser of the property do they get an interest rate of 10%. So if you think, first off, that somebody is trying to duck redemption, you've got 10 days after the expiration of either the 90 or 180-day period to file an affidavit, maybe with some type of evidence such as letters being sent to the people who purchased the home requesting this, to preserve your rights along the way and to cut off any what we would call a bona fide purchaser for value in that instance. Now, if you are the successful bidder on an HOA foreclosure, after the redemption period, well, once you buy it, guys, it's your home and you can start doing with it as you please. Can you evict whoever is in the home if you wish to do so? Yes, you can. You've got to give proper notice and understand how to handle those type of landlord-tenant issues. But again, that's a different video than on this one. As you do that and you've bought the home at the auction, it's your home, you can take control of the house. Even if it's the prior owner, you can actually evict the prior owner, they can vacate and move out, and they can still come back and redeem the property. Great. But once you become the legal owner of that property, you are free to do what you need to do with the home. You are the owner. But as you move forward with that, you take control of the home. A lot of investors think that there's some requirement that you have to go pay off any existing mortgage on the property. So the first answer of that is you do not have to pay them off. But at the same token, keep in mind, guys, the first lien holder doesn't have to agree to work with you. They may, because most of the time lenders just want their money. And if you're able to either bring that loan current, if they're behind in payments, take care of issues, they may very well agree to work with you, accept your funds, and move on. That'd be great. That's almost like a subject to transaction in a sense. But so often mortgage companies are probably going to want you to take them out of the picture. I've had several situations with investors. In fact, one gentleman, just to kind of throw a story out there, who on his very first time out of the chute, he buys 3 HOA foreclosures. Didn't pay a lot of money for them, but probably somewhere between $8,000 and $10,000 each is what I think he paid. Thinking that the mortgage company was going to work with him along the way and they take his payments. They didn't, and in fact, all the mortgage companies foreclosed. He lost everything. So when you do this, you have to make sure you understand that you may have to have the ability to pay off, refinance, do whatever you've got to do, any existing mortgage or mortgages or liens on the property, because they're going to stay there. And typically an HOA lien, guys, is going to be either in second position, third, or fourth lien position along the way. So keep those things in mind before you go spend your money. Just understand you need to be prepared to handle those situations if they come up. You don't want to get stuck in the middle and not be able to handle anything. But you have to be able to reach out to these mortgage companies, let them know the situation, and just ask the question. I don't think they're doing anything from the standpoint of start foreclosure immediately. There's going to be time. if that's what their position is. But at the same token, they very well may allow you to step in and start making payments, realizing down the road, they still have the option to call that loan due at any time. So I hope that helps out on HOA, guys. Hope you all found this beneficial.